What's up guys, today I'm going to show you an easy model that you can use every single day to make $200 on prop firm accounts, and it's called the IFVG model. I'm going to explain in that video how I use it perfectly using fair value gap rejections and buy side and sell side liquidity sweeps. So right here, let's go on Thursday, October 10th. You can see here we have generated sell side below us right here, which is also the 830 low. Then as soon as market opens 9:45, we start chopping a little bit, then we sweep the sell side liquidity pool here. One thing I'm looking at this exact moment is where are we delivering from. Right here you can see on the hourly chart we are delivering from a hourly fair value gap. We are tapping also into that order block here on the hourly, and also tapping into that 15-minute gap. So then I'm looking at, do we have a fair value gap that can confirm us that buyers are taking over in the market. This fair value gap basically tells me a lot of sellers are located between this level here and this level right there. And if I can pair up the fact that we swept liquidity into a higher time frame POI, and then we are disrespecting this gap, I'm gonna have a good understanding of who's in control, either the buyers or the sellers. And right here, if I disrespect this fair value gap here, where I basically located where all the aggressive selling previously happened, then I can take a long into an internal high and resting liquidity above. So right here, you can see we have a singular fair value gap here on the 3-minute chart. You can see that we cannot close below that sell side liquidity pool, which is a really good confirmation that okay, we are rejecting this level perfectly. We had responsive buying below that level. We had a lot of people that were waiting for that level to for price to tap that level in order to go long from. So right now we're just waiting for those aggressive buyers to step in and confirm us that okay, they are in control and the sellers are going to get squeezed out of that range here. So right here you see we push up, and as soon as you inverse this gap here, this is where you have the confirmation that okay, we are absolutely bullish. We swept sell side liquidity, we tapped into a higher time frame fair value gap, we cannot close below that sell side liquidity pool, and then we inverse that gap. What do I know? I know that resting liquidity above me is going to get taken out, and also most likely fair value gaps that are untapped. So right here we have a 5-minute untapped fair value gap. We are probably going to burst through that high and go and fill that untapped fair value gap here to fill those orders on the sell side right here. So what you're doing, what you want to do here in that scenario is buy either at market right there, but since we are so close to this high, I will want to buy at the pullback to this inversion. Why? Because if we're too close to that high, then my RR is basically screwed. So I'm basically praying for price to pull back so those sellers will have the chance to put their stops to break even. So click on buy. So everyone will be buying inside of that range, which will push price super aggressively to the upside. I would put my stops at the bodies here, and also kind of a mental stop, keeping a mental stop and waiting for a body closure of a bearish candle below that level to close my position for a loss if it happens. Okay, so right here, waiting for price to tap me in right here, waiting for price, wanting price to push to the upside and break this internal high right here. So right here pushes up, and you can see takes out this buy side liquidity pool, and you take out your profits right there for a nice gain, a nice quick little 1-to-1 scalp. This is the type of trades I like taking. I like taking sweeps into PD arrays, and I want to have the candle confirmations that okay, we are rejecting this level, sellers are no longer in control, and aggressive buying is happening. By looking at gaps, I'm looking at displacement candles right here. You see how aggressive this candle was. There's a lot of buying pressure inside of that. You are most likely not going to see this PD array fail to the upside. This is pure buying pressure, and those sellers are getting squeezed inside of that range. This is exactly what's happening, if I can summarize that to you in order flow terms. This was the only trade I saw on that day, and that was really worth taking. Hopefully this video helped you guys understanding the inversion framework and how I use it to scalp base hits, and see you guys next time. Peace out.